Yo, what's up guys? It's your boy Looney, and today I'm giving you 5 tiny portfolio tricks that actually makes a massive difference over time. These are simple, tactical habits, but when you apply them consistently, they stack up. So let's get right into it. But before we get into it, quick shout out to the Discord. It is free to join. And then I also offer a premium membership, which gives you access to one-on-one coaching, trade callouts. I have an option selling course and I do some giveaways. You could check it out. The links to that are in the description. But let's look at the first trick, and that is drown out the noise. This is the first for a reason. One of the best things you can do for your portfolio, especially right now, is to drown out the noise. That means tuning out of clickbait headlines, hype cycles, and panic posts on X. I'm going to show you a few examples. So if we look back at April, we saw April was a massive time to panic. And everyone was calling for a recession. Everyone was talking about doom. And we fast forward since April 8th, I believe, was Liberation Day. And they were talking about Black Monday and all the tariff talk. And yes, this was a red time or a bear market. But since then, my portfolio, along with others, is up. And not only that, is actually higher than where it started at the beginning of the year. And the beginning of the year was a great time to be. The market was doing really good at the beginning of the year, where it was January, February, then crashed in April, May, or March, wherever you want to think about it. And since then, we've seen on my portfolio up 40%, and my year to date, I'm up 12%. And it's not because I panic sold. I didn't even sell anything. I didn't sell any of my shares. I just held them through the storm, and we could see I'm finally positive. Hood is a good example. Robinhood was one that was really red, and this is one that I started during that time. Let me just quickly show you Robinhood. So Robinhood, I started in April when everyone was panicking, and since then I'm up 66%. So this is a good example of that to drown out the noise, because really you want to be buying when there's fear. Trick number 2 is to use DCA, or to automate your dollar cost averaging. You should be setting it and forgetting it. So seriously, if you're automating small, consistent buys like I'm doing with crypto, $1 to $5 into solid names, you could do it with ETFs like SPY, QQQ, but I'm doing it with Bitcoin or Ethereum, and it keeps you in the game without actually having to time things perfectly. You could see I'm doing $3 a day with Bitcoin, and it's working in this strategy. Some strategies doesn't work, but over a long period of time, you should be okay. And if you're not, ideally, you'd be doing better than someone that'd be buying at the top. So it's a safe strategy, and it is a consistent strategy. So this one, I'm up 44% just from just buying Bitcoin $3 a day. Sure, if you bought at the lows, you'd have a lot more, but at the same time, I didn't have as much invested at the time. So it was hard to actually have that sort of return and total return. Trick number 3 is just to track your real allocations, not just your holdings. So a lot of people might say that they're diversified, but they don't actually know where their money is. So make sure you're checking your allocations. Try not to go above 20% in one position, and try not to go as risky. So you could have risky plays, but try not to over allocate or have like 70% in a high risk growth position. So Riot is a pretty risky stock. I have 25% in it. One of my biggest positions, I'm not actively investing into it, and that's because I don't want to overdo it. I don't want to over allocate. And even one like SoFi doing really well. I'm up 18% or 20%. Again, I am not investing anymore at this time because I don't want to over allocate. So make sure you're just checking your allocations and you're allocating appropriately. And this goes for just your cash allocations, stocks, ETFs, crypto, and maybe even some option plays where you want them to be. And make sure you know where you want them to be. Now, trick number 4 is I'd say a more intermediate investing strategy, and that is to sell options. So this is one of my favorite strategies to run, and that's selling cash secured puts and covered calls. It's a way to lower your cost basis and also get paid to wait. So if you like a stock, but you don't want to FOMO in, you could sell a put at a strike price you're happy to own. And I'm doing this right now with Oscar. Now, there's been a lot of headwind or tailwind against Oscar, and right now it's up 10%, but I have a few sell puts going on at the $15, $12, $11, and $10, and I'm combining that dollar cost average strategy and also allocating my cash appropriately, so I'm not building a position that is too much. And you can see here, I'm okay with owning at 15, and it kept going lower, so I'm okay with owning at 12, and the process or the strategy continues. Now, the last trick, and this one's very important, is to just zoom out. This one is very mental, but it's huge. Always zoom out, whether you're red one day or green 1 week. It means nothing long term. The market doesn't reward impatience. It rewards consistency. So stacking small, smart moves done repeatedly will beat panic and hype every time. And that's it. That's 5 tiny tricks, but if you do these, you'll be surprised how far your portfolio can go. Smash that like if you're focused on long-term wealth, and let me know what small trick made an impact for you. And if you want to see my trades in real time or get coaching, the link to the premium Discord is